Hello traders everywhere, Adam Hewison here, president of INO.com and co-creator of MarketClub with your midday market update for Friday the 10th of May. Here's the question, is this market running out of gas or is it just complacency sitting in? We just keep going up, going up, going up. But today we're actually down on the day, which is quite a surprise. And we'll be looking at the markets. And let's go right to our portfolio manager. And we are starting off with gold. Gold is down big time today, down $39, down 2.67%, all red trade triangles. Not good. So let's go to that chart right now. So I've already drawn in some, let's go back to a simple candlestick chart, but I've already drawn in some pictures of the Fibonacci, and potentially around the 1400 level, that is a 50% pullback. And 1384 is a 61.8%. I would say somewhere between 1384 and 1403 we'll see some sort of support. The market's very heavily oversold, but the reality is it's had a big move up, and that's the correction. The trend, clearly, looking at our trade triangles, is down. I expect this market to continue to be negative next week and on the defensive. So let's go to our next market, and that's crude oil. Crude oil has had a mixed results. The longer term pattern is still down, but the weekly is positive and the daily is negative. So mixed results. But this is what I'm looking at right now in crude oil. This is the June contract. Drawing a trend line right here, and you can see right around the 93 level, that's where the market should find some support. I'm also going to put in the Fibonacci, which you simply draw from the highs, pull it down to the lows, and it gives you some 61.8% is a 92.74. I would say around 93 to 92.74 is a pretty good way to be looking to buy this market. We will get a little bit overbought on the upside, but it could be making a nice base to go higher. Certainly if we see this market go over 98, it's going to be off to the races. And it could be a situation in the Mideast, which of course we all know is a very volatile region of the world right now. We're looking at the euro, which is under immense pressure today. You can see this sharp down day, and we're trading at 129.52. This is real time, and you can see it's really down quite a bit. The lowest it's been since the early part of April. Now, this is what I'm looking at. If I can quickly draw in a close only chart, boom, there it is, and I'm going to use a little bit of a drawing tool here. So you can see these are the problems I see. Here's the high here, and here. This is the 131.50 area. That's where we are. This is a pivot point right here. We can measure from this point right here to this point, and that gives us 130 to 150, let's say. So if we subtract 150 from 130, gives us 128.50, which is right here, and that takes us back to these lows. So I think we're going to see this market under pressure continue to meet the target zone on the pivot point, which is right here. That's the pivot point right there. So let's see how that plays out. Let's clear the screen, and we'll go to our next market. And the next market we're going to be looking at is, of course, is the Dow. Dow is, I'm going to put a candlestick chart. You can see we have two negative days here so far. Not really enough to get excited about, but certainly if the complacency set in. We've been up, 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 up and away for months and months. And quite frankly, we've had a great run with our trade triangles. Here's the monthly that's still in here, and I have to scope this out further, out further. There it is. You can see the monthly kicked in right here, and that was a pretty nice move. That was on the 22nd of January, so you can see how long we've been in this position. We've never had a sell signal. So that was from 1366. We're currently 1551, so it's a nice move. We haven't got the signal yet, but we're getting a little bit concerned because we are up against these top of the trade channel on many of these markets, particularly in the S&P 500. Here's a trade channel we talked about. I'll just draw it very quickly. I'm not going to be precise, but just that'll give you a rough idea of what we're looking at. But here's the channel, and I would see this market coming back down. So we are overextended on the upside. I would not be surprised to see this market coming back down to 1600, and I would not be surprised to see it go up to 1650. So let's see how that plays out. No signals, everything's a go right now, but complacency is sitting in. Eventually gravity will come and hit this market. So moving on to our next market, which is the NASDAQ, and this is the composite, and again, much the same. You can get that same pattern, the parallel trend lines, and you can see just very quickly how that will work. So you just simply draw the lines like that, and I'm just drawing this very quickly and very roughly, but it gives you an idea of where this thing is heading. So we're pretty much up towards the highs of that range. I'd expect to see a pullback in this market. Now, one thing you want to look at this weekend, go to our smart scan. I've already put this in, and you want to look at 52-week highs and see what's happening there. I've turned this down. We're looking at equities less than $50, greater volume than 2 million, and just trading on the U.S. exchanges. Lots of opportunities to give a weekend trade, to get long some of these stocks, and then kick them out on Tuesday morning when they open higher. Hey, listen, this is Adam Hewison for Market Club. Have a great weekend and a great trading day. I'll see you next week. Put the power of the trade triangles on your side. Join Market Club today.